Good afternoon, folks. Dan Frio here with your rate update. So today we're going to talk about the CPI, but I've got a little bit of a different format that I'm going to try out because my videos are getting a little lengthy and we're getting a lot of people dropping off mid kind of view. So I'm going to try to condense these as quick as I can. So pay attention and join along. So in today's report, we're going to talk about three things that are basically hitting the headlines today. That is CPI, which is the inflation numbers on the consumer level. And then throughout the rest of this article, we're going to see what other events are out there. Well, the CPI, year-over-year inflation, so that's in one context. The Biden administration in the default of our debt or our debt ceiling, and then the next rental prices. What's really going on with rental prices? So those are our three topics for today. Without further ado, let's get into it. We're going to talk about what's going on the inflation front. Why do we focus in on this? Because you guys are concerned what's going on with housing. Is the housing market going to crash? Where's the crash? Is it going to not crash? Is it a good time to buy? I'm giving you guys all the information you need to make a prudent decision what's best for you in your life. So what we're seeing in today's world or economy is inflation's tumbling, folks, and it's going to tumble even faster once the Federal Reserve gets caught up with technology. Let me explain. Here's today's consumer price index. Now, this is the consumer leveled inflation. So let me get my head out of the way, and we're going to break this down. You can see that over on the right side here, these are the year adjusted figures. Look at some of these numbers. Well, it's up 4, it's up 7. This is in the food area. That's still playing a big role in our economy. But look at energy. You go down through here, fuel oil. Okay, look, it's down 20%. Gasoline, down 12%. Energy commodities, down 12%. Remember I kept saying, my pet peeve is oil and these oil companies. Well, this is coming down pretty darn fast. But one thing I want to show you is that the shelter piece of this equation. Why? Well, because the shelter piece of the CPI, the consumer inflation, is a third of the number. Look, it's almost a third, 32.7%. So let's focus in on that. So when you go down through here, what they're saying is the shelter number right now is 8.1 year over year, okay? But you start lopping off some of these. Well, let me show you. We go to apartmentslistings.com. It's a report just out a couple weeks ago. You go down through here and they're giving you some bad news about that information. It's increasing, keeps increasing and increasing and increasing. But look down through here. The Federal Reserve is basically monitoring rates about mid last year, which would put us in right about this range, okay? But if you forward fast a little bit, you're going to have this big plummet. Okay, this is the month over month shelter number. So if you go from a positive number up here of, let's say 1.5 or so, over here it was 3, but you go over here and then you have a negative 1. So you go from 1.5 positive to negative 1, it's 0, right? Okay, so if we go back to this and we make this a 0 and update all these numbers, this number is going to plummet. That's why I'm still on the fence. I'm saying that our inflation rate, once they catch up, is going to be about 2.6 to 2.8%. I had several videos. I explained how I came up with this number before. I'll try to find those and put them up here if I can find those. Okay, so that's that part of it. The next thing we want to look at is the debt ceiling, because in this equation here, we have President Biden remains optimistic that the United States will not default on its debt, because if we default on our debt, guys, it is going to be worldwide catastrophic. Okay, so we're not going to default on our debt. So has the debt ceiling ever been reached before, and what happened? Well, let's go over this. This might surprise you. Since 1962 to 2011, just in that time frame, the debt ceiling has changed 74 times, and not one of them was going down. Okay, so basically it's like this. If you have a partner or a person that they keep getting credit cards and they max them out, and you go to them and say, we're not getting another credit card. And they're just like, oh, please, 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 please. Just give me one more and I'll learn my lesson. Okay, here, I'll give you another one. Now they're on their 74th extra credit card. Guys, you need to stop. Okay, so what I'm expecting in today's market, let's get over to where the bonds are going, is the CPI number actually came in better than expected. Well, better on a trajectory of where we've been. So the markets are pretty much liking that. You can see here, if my numbers up through this top of the screen are out, that means they're green. That means it's good. Okay, here's what I'm talking about. We follow on my channel is what's going on with mortgage rates. So we follow this number right here. What's going on with this right now, this is the price of a mortgage-backed security bond. So this is what we truly follow when we're trying to figure out what's going on with mortgage rates. This is the price of the bond. As the price goes up, in this case, it's up 17. As the price goes up, the yield or the rates go down. Okay, so the bigger the number up, the bigger the down in the interest rates. Okay, so that's how this all works. So right now we have a plus 17 in the market. So I'm expecting rates to come down about 0.08%, about that. Nothing really to write home about. Probably most banks won't even change their rate sheets yet because it's not a big enough move. But stay tuned because all this information is going to come around and you're going to start seeing mortgage rates coming down based on a lot of this information. So if you're out there and you're wondering, Dan, why do you do the videos? What do you actually do? Well, I'm actually a mortgage person. So if you're out there and you need assistance with getting maybe pre-approved, maybe kicking the tires, see how much you can get approved for, or maybe you closed on a loan about 6 months ago and your rate's in the 7s. Now rates are in the sixes. How much money could that save you? Well, check and call us and find out. How do you do that? Give us a call, 844-775-5626, or there's a scheduling button down below, a calendar event where we'll do one-on-one consultations with you guys to answer any and all the questions that you have. So I do have an event this evening. It's 8 o'clock at Eastern Standard Time. Check it out on my channel. It'll be a live event with Nicole Nark, a fantastic realtor out of Arkansas, to go over all your first-time home buying questions, concerns, and issues, and maybe we can put less fear in your mind when it comes to buying a house in 2023. Thanks so much for watching, guys. God bless. I'll see you next time. Bye-bye.